Your government wants to replace your cash with a digital currency they control completely. They can see every transaction you make. They can freeze your account instantly. They can program your money to expire if you don't spend it by a certain date. They can restrict what you're allowed to buy. They can turn off your ability to transact with a single database entry. This isn't science fiction. Central bank digital currencies are being developed by over 130 countries right now. China already launched one. The European Central Bank is piloting one. The US Federal Reserve has been researching one for years. This video breaks down exactly what CBDCs are, what governments can do with them, why they're being pushed so aggressively, and why Bitcoin exists as the exact opposite of everything a CBDC represents. A central bank digital currency is a digital form of a country's fiat currency issued directly by the central bank. It's not like PayPal, not like Venmo, not like your bank balance. Those are private company systems sitting on top of the dollar. A CBDC is the dollar itself in digital form issued by the Federal Reserve. Every unit is a direct liability of the central bank. No commercial bank in the middle. No private company intermediary. Just you and the government's digital ledger. That direct relationship between citizen and central bank is what makes CBDCs fundamentally different from anything that exists today. CBDCs and cryptocurrencies share the word digital. That's where the similarity ends. Crypto, decentralized. No single entity controls it. Permissionless. Anyone can transact without approval. Censorship resistant. No one can block your transaction. Pseudonymous. Transactions are public but not tied to identity by default. CBDC, centralized. Government controls everything. Permissioned. Transactions require approval. Censorship built in. Government can block any transaction. Fully identified. Every transaction tied to your real identity. CBDCs use some blockchain-inspired technology for efficiency, but they are the philosophical opposite of Bitcoin. Where Bitcoin removes government control from money, CBDCs maximize government control over money. China launched the digital yuan in 2020, called the eCNY. Pilot programs in dozens of cities, millions of users. Here's what the Chinese government can already do with it. Set expiration dates on money. During COVID stimulus, digital yuan was programmed to expire within months if not spent. Force spending. Automatic tax collection at the transaction level. Geographic restrictions. Money that can only be spent in certain regions. Merchant restrictions. Money that can only be spent at approved vendors. Transaction monitoring. Every purchase visible to authorities in real time. This isn't theoretical. This is operational in China right now. The blueprint exists and other governments are studying it. Over 130 countries representing 98% of global GDP are exploring CBDCs. 11 countries have fully launched. 21 are in pilot phase. The rest are in research or development. The Bank for International Settlements coordinates CBDC development globally. They publish research, share infrastructure, help countries build compatible systems. The pace of development accelerated dramatically after COVID demonstrated that digital payment infrastructure is critical national infrastructure. The question isn't whether CBDCs will exist. They already do. The question is how much control governments will exercise over them and whether citizens will have any alternative. Every government justifies CBDCs with the same talking points. Financial inclusion, bring unbanked populations into the financial system. Payment efficiency, faster, cheaper transactions. Reduce friction in commerce, reducing crime. Eliminate cash used for drug dealing and tax evasion. Monetary policy effectiveness. Implement negative interest rates and stimulus payments more efficiently. Reducing costs. Eliminate physical cash production and distribution. These benefits are real. A CBDC genuinely would make some of these things better. The question is whether the benefits justify the surveillance and control infrastructure being built alongside them. The surveillance capabilities being built into CBDC systems go far beyond what's advertised. Programmable restrictions. Money that can only be spent on approved categories. Imagine stimulus money that can only buy groceries, or social credit money that can't buy alcohol or gambling. Automatic taxation, every transaction taxed automatically at the point of sale. No filing returns, no deductions, no strategy, just automatic extraction. Social scoring integration. In China's system, CBDC access can be linked to social credit scores. Bad behavior reduces spending power. Emergency controls, account freezes deployed instantly without court orders. Canada froze trucker protest donor accounts in 2022 using existing banking systems. CBDCs make this trivially easier. Negative interest rates. Central banks have wanted to implement negative rates during recessions. With cash, people just withdraw and hold physical currency. With CBDCs, there's no escape. Your digital money loses value automatically if you don't spend or invest it. In February 2022, Canadian authorities froze the bank accounts of people who donated to trucker protests. No court order required, no due process, just administrative action by financial regulators. Accounts frozen, debit cards disabled, people couldn't buy groceries, pay rent, access their own money. This happened with existing banking infrastructure, not CBDCs. It took some effort to identify donors and contact banks. With a CBDC, the same action takes seconds. One database query, one command. Every account of every identified participant frozen simultaneously. The precedent was set. The infrastructure is being built. Cash is the last truly private payment method. When you pay cash, there's no digital record, no database entry, no transaction history, no government visibility. Cash enables legal privacy. Buying medicine you're embarrassed about, donating to controversial causes, supporting businesses you'd rather keep private, paying for services discreetly. With CBDCs eliminating cash, every transaction becomes visible to the issuing government, not just suspicious transactions. Every coffee, every book, every donation, every medical purchase, every religious contribution. The end of financial privacy is the end of a category of freedom that most people take for granted until it's gone. CBDCs give central banks unprecedented monetary policy tools. Helicopter money with targeting instead of broad stimulus, direct deposits to specific demographics. Low-income earners only, specific regions only. People who haven't spent in 30 days. Expiring money distributes stimulus that expires in 90 days to force immediate spending. Prevent saving, force consumption. Negative rates without escape. If central bank sets negative 2% interest rate, your CBDC balance shrinks 2% per year automatically. You can't escape by holding cash. Cash won't exist. Instant tax implementation, new tax on luxury goods, automatically applied at every transaction instantly without legislation delay. These capabilities represent the most powerful monetary control tools in human history. CBDCs genuinely could help the 1.4 billion unbanked adults globally. No bank account required, just a phone or a card, access to the digital economy, cheaper remittances, lower transaction costs. This is real. In countries with weak banking infrastructure, a government-issued digital currency could provide financial access millions currently lack. The tragedy is that this genuine benefit is being used to justify surveillance infrastructure that serves entirely different purposes. Financial inclusion could be achieved with many technologies. The surveillance capabilities being built alongside CBDCs go far beyond what financial inclusion requires. Bitcoin was created in 2009 in direct response to the 2008 financial crisis and the demonstrated willingness of governments to bail out banks while ordinary citizens suffered. Satoshi Nakamoto embedded a message in the first Bitcoin block, a newspaper headline about bank bailouts. The message was intentional. Bitcoin was designed as the alternative to a system where governments and banks control your money. CBDCs are the ultimate expression of that system. Government money, government controlled, government surveilled. Bitcoin is the exact opposite. No government issues it, no government can freeze it, no government can program restrictions into it. No government can see who holds what if proper privacy tools are used. The timing is not coincidental. As CBDCs accelerate globally, Bitcoin's value proposition has never been clearer. Some argue CBDCs and decentralized crypto can coexist, People will use CBDCs for everyday transactions. They'll use Bitcoin for savings and large transfers. This might be true in the short term, but history shows that when governments control payment infrastructure, they eventually use that control to restrict competing systems. China banned Bitcoin while pushing ECNY. The EU has discussed CBDC-compatible regulations that would restrict privacy coins. The US has discussed limiting cash transaction amounts. The pressure to make CBDCs the only option tends to increase over time. Coexistence is possible in the short term. Long-term coexistence requires deliberate regulatory protection of alternatives. CBDCs are being developed largely outside democratic oversight. Central banks are independent institutions. They don't require legislative approval for research and pilot programs. By the time CBDCs are ready for deployment, the infrastructure will already exist. Citizens will be presented with a fait accompli. The system is built. Here are the limited options you have. Public consultation is often minimal. Technical decisions with profound implications for financial freedom are being made by unelected technocrats and central bankers. This democratic deficit is itself a concern independent of whether CBDCs are good or bad. You can't stop CBDCs from being built, but you can protect yourself from maximum surveillance and control. Hold Bitcoin in self-custody. The antidote to programmable government money is non-programmable decentralized money. Maintain cash holdings. Use cash while it still exists. Every cash transaction is a vote for financial privacy. Understand what's coming. Most people will accept CBDCs without understanding what they're giving up. You now understand. Support privacy legislation. Know where your representatives stand on financial privacy. Diversify internationally. Some jurisdictions will implement less surveillance-heavy CBDCs than others. Geographic diversification of assets reduces single government exposure. CBDCs won't arrive overnight with an announcement that cash is banned. The rollout will be gradual, convenient, incentivized. CBDC payments get small discounts. Cash transaction limits are lowered. Bank branches close. ATM networks shrink. Digital payments become default. Cash becomes inconvenient, then scarce, then banned except for small transactions, then banned entirely. Each step seems reasonable. The cumulative effect is total financial surveillance and control. This is not conspiracy. This is the stated policy direction of multiple major central banks and the BIS. It's happening in slow motion. Opposition to CBDCs is growing. In the US, multiple states have passed laws restricting CBDC implementation within their borders. Florida banned CBDC use in the state in 2023. Several other states followed. Presidential candidates made CBDC opposition a campaign issue. In Europe, privacy advocates and civil liberties organizations are pushing for strong privacy protections in the digital euro design. In developing countries, dollarized economies are resisting CBDC adoption that would increase dependence on monetary authorities. The resistance is real. Whether it's sufficient to prevent the surveillance infrastructure from being built is an open question. CBDCs will happen. The efficiency and control benefits are too attractive for governments to resist. The question is what form they take. Maximally surveilled programmable government money, or privacy-protected digital currency with strong legal safeguards. The outcome depends on public awareness and political pressure. Most people don't understand what CBDCs are. Most people will accept them without question because they're convenient and familiar feeling. The minority who understand the implications have a responsibility to push for privacy protections and to maintain alternatives. Bitcoin exists. Self-custody is possible. Financial sovereignty is still achievable, but the window to establish these habits before CBDCs become mandatory infrastructure is narrowing. Comment, worried if this video changed how you think about CBDCs. Or bring it on if you think the benefits outweigh the risks. I want the full spectrum of opinions on this one. Next video, I'm breaking down Bitcoin privacy tools, how to transact without leaving a trail, and whether true financial privacy is still possible in 2026. Subscribe to Unbanked. The old money had a head start. You have the internet.